awesome accounting students. I hope you're ready to hit the second half of Chapter 4. In the first part of Chapter 4, we learned that the General Journal was a book of original entry. That means it's the first place a transaction gets recorded. We learned the rules of journalizing. But we also noted that the journal had a problem. Although it keeps a great historic diary of what has happened to the company financially, it doesn't have any balances on it. In class, we talked about the importance of always knowing important balances, such as the balance in our cash account. It's pretty important to know how much cash you have on hand at all times. So, to compensate for this issue, we introduced the general ledger. The general ledger is another accounting document that is used to keep track of cumulative balances. We use general journals and general ledgers in the real live accounting world. Sometimes they are computerized, but they exist in some form, whether it's a manual system or a computerized system. So let's spend some time getting familiar with how the general ledger works. The reason we need the general ledger is to track the balances of every account that a company uses. In Chapter 3, we were introduced to T accounts to help us learn the rules of debits and credits. In real life, however, T accounts don't exist. They're too messy and they're inefficient. Instead, we use ledgers. The process of transferring data from the journal to the ledger is called posting. So take a look at this balance ledger form. There are different types of general ledger forms, but this is the one that we'll be using. The balance ledger form has columns that are similar to the general journal, but there is an additional set of columns which will track the balance. These are known as the balance columns. This other set of columns is sometimes called the action columns of the ledger because that's where the amounts get recorded from the journal. If you think about it, these action columns really do remind us of what our T accounts look like. We will rely on our knowledge of the rules of debits and credits in order to complete the general ledger postings. The way that we will get information from the journal to the ledger is through the process of posting. We learned that it's very tedious and it's time consuming. We're thankful that it's usually done electronically in today's accounting systems, but nevertheless, we're learning about the accounting cycle, and so it's important that you understand the posting process. We will demonstrate that next. In the previous video, we saw how to journalize transactions. Now we're going to see how to post those transactions to the general ledger. Remember, there is a ledger card for every account. In this case, the owner invested $100,000 into the company. First, we move over the date and the debit amount of $100,000 to the debit column of the cash account. In this case, cash is account number 101. Then we move over the credit of $100,000 to Trayton Eli's capital account, which in this case is account number 301. So the first process of posting is transferring over the date, the accounts, and the amounts into the appropriate debit or credit column. Next, in each case, we also bring the cumulative balance over to the appropriate side. In this part of the posting, you need to remember the rules of debits and credits. In the first account, cash is an asset, and assets are increased by debits and decreased by credits. In this case, the $100,000 debit to cash made the cash account go up. So we record our cumulative balance of $100,000 in the debit column. In the second account for capital, that credit pulled Eli's capital account up. We moved that $100,000 credit over to the balance column. A good reminder, the action columns is where the information from the journal was transferred over to. The balance columns are updated after every transaction in order to show the new balance of the account. In the process, we then cross-reference. In the journal, we write the account number, where the account was posted to. 101 represents the account number for cash, and 301 represents the account number for capital. Likewise, in the general ledger accounts, we write the corresponding journal page number that the information came from. This is called cross-referencing. Each of these numbers are placed in the post-reference column of both the journal and the ledger. Here's a picture of the completed ledger account for cash. Notice that in the action columns, the debits make the cash account go up and the credits make the cash account go down. After every transaction is entered, make sure you update the balance columns. After the first transaction, there is a $100,000 debit balance. After the transaction on the 7th, the credit of $5,000 to cash makes the cash account go down. So 100,000 minus 5,000 is 95,000. After that transaction, there are 3 more credit transactions to cash. One for $1,500, one for $2,500, and one for $8,000. Each one of these credits pull the cash balance down. So you will see the updated balance after every transaction. In all asset accounts, debits make it go up and credits make it go down. Again, those previously learned rules of debits and credits become critically important during the posting process. So now that we've learned how to post, let's look back at what we've learned in the accounting cycle. Remember, the accounting cycle is a series of steps that all businesses must perform in their accounting information system. We started the process by analyzing transactions and thinking about the accounts that may have been increased or decreased. Then we transitioned into recording transactions in the general journal. We learned that that was called journalizing. Then we learned that the journal was a great book to keep a historical record of what has transpired, but it didn't have any balances. So we learned how to post to the general ledger. So what happens next? Just like we did previously when we were using T accounts and we had finished footing our T accounts, we created a trial balance. The purpose of the trial balance was to ensure that the sum of the debits equaled the sum of the credits. In this case, now that we're using the general ledger, the process is the same. Rather than carrying the balances over from T accounts, we will now carry the ending balances from each ledger account to the same trial balance that we've seen before. We need to methodically go through each and every general ledger account and carry over the ending balance from the ledger to the trial balance. Each account has a balance dropped into either the appropriate debit column or credit column. At the bottom, the sum of the debits must equal the sum of the credits. This is again a concept that is carried over from the previous chapter. Now, instead of pulling the balances from T accounts, we will be pulling them from the general ledger. In closing up this chapter, I wanted to take a moment to speak about accounting errors. As you saw, the posting process can be tedious, and it's very possible that we'll make a mistake. At some point, you will make errors, and so we need to understand how to correct them. It depends on when the error is discovered. We will learn about 3 methods to correct errors: the ruling method, the correcting method, and the reverse and correct method. Make sure you read about these topics in the book. The ruling method, and probably the easiest out of the 3, can only be used if the error is discovered prior to posting. To use the ruling method, simply put a line through the wrong part of the journal entry, correct it right in the journal by writing in the correct item, and you might want to consider initialing it as well if there are other people who are recording journal entries. Once again, it can only be used if the error is discovered prior to posting. The correcting method can be used after posting. The correcting method leaves a better audit trail than the previously described method. So in this case, as in the last case, we made a payment of a utility bill to the gas company, but we accidentally debited rent expense. So to use this method, identify where the error is. In this case, the error was the debit to rent expense. Notice that the credit to cash was okay. There's nothing we need to do to fix that credit to cash because it is indeed correct. So focus on the rent expense error. To get it out of the system, we do the opposite. In other words, our mistake was to debit rent expense. So to fix it, we credit the rent expense in the correcting entry, and then we debit utilities expense, which is the account the transaction should have been charged to in the first place. On the top of the screen is the original erroneous journal entry. On the bottom of the screen, you will see the correction that would be journalized to fix the mistake. Off to the right, you will notice that the rent expense now properly has a 0 balance, and the utilities expense now has the $2,000 that should have been charged to it. This will catch the attention of the auditor. As you learned in class, expenses are always debited. So the fact that there's a credit to an expense may set a red flag out. That's why it's imperative that you leave a very good description of why the journal entry was made. The third and last method is called reverse and correct. Reversing the entry takes the books back to 0. So to reverse the entry, flip it. Do the opposite of what was done in the original erroneous journal entry. That's called to reverse the entry. Then, now that your accounts are back to 0, record the journal entry the way it should have been recorded in the first place. Again, this technique is called reverse and correct. It leaves the best audit trail and is the easiest to use when you have complicated transactions. Spend a few moments reviewing the section about errors in your textbook. That wraps up Chapter 4. This chapter focused on 3 major topics: the use of the journal, the use of the ledger, and how to go about fixing errors. It's important that you keep learning every step of the way. The best way to learn is to get your hands dirty and practice. Always ask questions as they come up. There's a support team here ready and willing to help you. You just need to ask. And let's keep pushing ahead towards the finish line. We got this. Professor Johnson signing out.